Bulls charge ahead on Dalal Street with the Nifty cruising past the 100 DMA with a 270-point surge. Financials lead the charge with the Nifty Bank rising over 2%. The mid-caps see momentum with 3 stocks advancing for every 1 stock declining.
The last 5 months was only a correction in an ongoing bull market, says veteran investor and BSE member Ramesh Damani tells CNBC-TV18 that system-wide leverage remains low and there is no economic crisis in India, which makes him confident of the bull market resuming.
Gas stocks are trading with healthy gains on the proposed amendments to tariff regulations by the PNGRB. The new rules may increase tariffs for GAIL and GSPL while reducing gas sourcing costs for city gas distribution companies.
We will not run behind F&O market share. However, the probability of shifting Sensex weekly expiry can't be ruled out. BSE MD and CEO Sundaram Ramamurthy weighs in on this weekly expiry debate, says F&O turnover is down by 40% across exchanges. That too is a CNBC-TV18 exclusive.
A reduction in FPI selling boosts the rupee to a near 3-month high even as the dollar recovers some lost ground against the euro and the yen. The rupee rises to nearly 85.80 against the greenback as against Friday's close of 85.97.
A rip-roaring rally, that's what we're seeing on D Street this morning, continuing from last week, this afternoon rather. 270 points on the Nifty, doing extremely well for the Nifty Bank, 1,000 points on that one, with the mid-caps doing a lot better. 2,000 stocks in the green for about 600 which are in the red. You're watching us here on Halftime Report. I'm Mangalam Malu, with me, Hormaz Fatakia. We come to you live from the CNBC TV18 Motilal Oswal studio. What a day, Hormaz.
Oh, what a day, what a week it has been, what a good last 6 days we have had, and the Nifty continuing to build on from the recovery that we have seen from that 4th of March lows of 21,964, and we are almost about to turn positive on a year-to-date basis as well. 23,644 is that level, and today's intraday high is 23,643. So we are almost there, about to turn positive yet again on a year-to-date basis for the Nifty, and good going for the broader markets as well. As Mangalam was mentioning, the Nifty Bank is up 1,000 points. The mid-cap and the small-cap indices not too far behind either, and it is some of these gainers, some of the beaten-down names that are doing well in today's trading session as well. The Phenol Cables is one of them. It was one of the lesser degree of fall that we saw when Adani had announced their foray into the cables and wire space. That stock is among the top gainers on the Nifty 500. 13% higher on that stock. Phenol Cables is the stock that I'm talking about. There you can see at the highest point of the day is Phenol Cables. Phenol Industries too is trading with gains of around 11%. And Sun Pharma Advanced, we spoke about this on Friday, was among the top gainers on the Nifty 500. Continues to remain so in today's session as well. Sun Pharma Advanced, Spark is what I was mentioning, SPARC, that too is up over 9% in today's trading session. Some of the other PSU names, be it IREDA, HAL, RailTel, all of them, Bharat Dynamics continuing to do extremely well in today's trading session as well. But the one that is not doing well though in today's session on the flip side in a market like this is Titan, and that is after an ambit note where the brokerage has warned of a slowing growth momentum in the fourth quarter, Mangalam.
Yep, if you remember all of last week, Titan was actually fairly well bid, and this morning it is seeing some bit of pressure. The important part here is Ambit believes that maybe because of rising gold prices, there could be a near-term risk to their demand growth itself, and growth momentum they expect may moderate in the fourth quarter for the jewelry sector itself. In the third quarter earnings call, the company had indicated a strong start to the fourth quarter, but they also flagged a pause after the first 3 weeks of Jan due to a sharp rise in gold prices. So to that, Ambit says the channel checks do suggest weaker revenue growth momentum for Tanishq in both Feb and March, and this puts that 22 to 29% growth built by them and consensus for the fourth quarter at risk, which implies that there could be a cut of nearly 2 to 3% for FY26 and FY27 estimates, assuming a 15 to 18% growth in the fourth quarter as against the 22 to 29% which was assumed earlier itself. And this near-term revenue pressure and the uncertainty on margin puts Titan's 50 times FY27 earnings seem expensive. So they believe the better way to play the consumer discretionary recovery is via Nykaa and Sapphire. Truth be told, Nykaa has been outperforming when it comes to the results as well. And if you look at Sapphire, there has been a wave of up move that we've seen in all the quick service, restaurants and the names out there as well. Case in point, not just Sapphire which has the lowest, valuation multiple or highest valuation comfort, look at something like a Jubilant Foodworks as well, which now as we speak has seen a big up move. And Titan's, weakness may be looked at as an opportunity for other gold companies to see a purchase. Case in point again, Senco continues to do well for 5 trading sessions, has been hitting that 5% upper circuit mark. We had the management join here and say that they are buyers in the open market. Kalyan Jewellers, for instance, as well, seen a big gash from the top itself, and at lower levels, finding some buyers, beaten down name, stock up around 4% on that count as well. Titan perhaps may have benefited from some money going out of these companies. Now, these companies may benefit if some money goes out of Titan as well. So we'll keep an eye out on this entire space. Fairly exciting from a consumer discretionary standpoint.
Indeed, and some bit of profit booking, of course, as you mentioned, right, after the move that the stock had last week as well, 2.5% lower. Titan among the very few losers on the Nifty this afternoon. But moving on, CLSA has come out with a note on the IT sector at their 4th quarter preview, where they say that the uncertainty is already priced in for the sector, and they added that a lot more pessimism is already built into the current valuations than the potential earnings cuts. Rima is joining in with more on this. Rima, what does CLSA have to say?
Indeed, they believe that the uncertainty is priced in because the Nifty IT index has fallen 15% so far this quarter, while the Nifty is only down 1%. So it's underperformed to a great deal, and this underperformance captures the pessimism and the potential earnings cuts to their mind, and even a weak Q4. But they do acknowledge that the tough and uncertain macro will result in a postponement of discretionary demand by 1 to 2 quarters, particularly impacted sectors like manufacturing and retail, where the impact of tariffs will be held. So there will be pain over there. So they've lowered the revenue growth forecast for Indian IT companies by 3 to 4%. So that's pretty substantial. But the EPS impact cut will be fairly limited, 1 to 3% on account of rupee depreciation. So the top line will be under pressure in FY26, but there will be focus on cost optimizations, where a lot of Indian IT companies have a right to win. So they particularly have upgraded HCL Tech to an outperform rating, because they're saying HCL Tech has the capacity to continue to post industry-leading growth even in FY26. They also like the other large caps, Infy, HCL Tech, Wipro, Tech Mahindra. They've upgraded LTI Mindtree to an hold from an underperform rating. And just to put on board, because this is a preview note, this is what they're expecting for the full year in terms of guidance. For Infy, 2 to 5% kind of a top line growth, wider than usual on account of uncertainty. For Wipro, for HCL Tech, 3 to 5% kind of revenue growth this year in terms of guidance. And for Wipro, they will give a Q1 guidance, that's for the June quarter, 0 to -2%. Back to you.
All right, Rima, thanks a lot for that, for talking us through what's looking like in the IT space, the preview coming in from here. But we'll take a short break, and as we do that, let's get you some good news. It's India's business news leader, which is the CNBC-TV18 all-new app. It's on your fingertips, via which you can get access to breaking news, in-depth articles, all the financial world updates, all of them at your fingertips. You can download this CNBC-TV18 app from either the Apple Store or the Google Play Store, or just scan this QR code, which is there for you on your screen.
Welcome back. 23,624 is where we are at the index, seeing some bit of resistance around that 23,650 mark, at least for now. It's interesting to see how the second half shapes up, but some flashes on your screen that Mahindra & Mahindra is in talks to buy out the entire promoter stake in SML Isuzu, and that's a CNBC Awaaz exclusive, and that's the news that's flashing on your screens right now. And they are also expecting a valuation of around 1,400 to 1,500 a share for SML Isuzu. We'll get more details on this as the show goes by, but as of now, the stock of SML Isuzu is seeing some bit of movement, but Mahindra & Mahindra continues to trade around the lows of the day.
You know, it's a very interesting development this happens, because SML Isuzu, what we understand, has been on the block for a very, very long time. Earlier, there have been reports that, someone like a JBM Auto may perhaps show some interest in SML Isuzu as well. Time and again, whenever the managements did join us of either SML Isuzu or JBM Auto, we've quizzed them on this itself, with them obviously saying that they're always in talks and there's nothing new to report. So the short point that we understand right now is that SML Isuzu is on the block. JBM Auto may not be the person who is going to buy it. M&M will be the company that will buy it. But it's interesting that if JBM Auto is not the one who is buying it, then does that save them the cash to go ahead and buy something else? That's the reason why that stock too, after seeing a bit of a drubbing, has seen a bit of an up move. So if you pull up something like a JBM Auto, that stock's actually up in double digits, up 10.5% on the news that they are not the ones who are buying SML Isuzu, but between 1400 to 1500 per share for SML Isuzu, it's actually a 200 rupee discount to where it's currently trading, notwithstanding the up move that it's seen from lows already. So, it'll be very, very interesting to see how this does go by. But for M&M, they have the balance sheet strength, and at the same time, this falls in line with their expansion plans with regards to the trucks and buses segment as well. Positive from an M&M standpoint, positive from a JBM Auto standpoint, that they don't have to pay top dollar. Perhaps a positive from an SML Isuzu standpoint as well, despite it being a near-term negative, because the price is a lot lower than what the stock is trading at right now. So we'll keep an eye out on this development as it moves on. We'll get more details on this as well. But speaking about that, let's talk about the markets in general. Ramesh Damani, the veteran investor, discussed the market rebound and why he feels that the bull market run has resumed. He also told us why he's not too concerned about the direction of FII flows.
The good news would be is that, in my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market. Okay. What happened was the first correction in 4 or 5 years, it was particularly severe. And market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. Secondly, more importantly, in the last 60 to 90 days, I put I had the road, rubber meet the road, went and visited a lot of companies, just try to get feedback on what things are in corporate India out there. And almost universally where I went, people are talking about expansion, talking about growth, talking about margins, talking about profitability. So this was more of a market event than an economy event. There's very little leverage in the system. Banks are not leveraged. The stock market is not leveraged. So it was just a correction of valuation, which had probably become excessive, took place. And now we're, resuming the bull market that began in 2021.
Well, that's really good to hear because, absolutely. I mean, we couldn't really pinpoint an economic crisis or a financial accident which triggered this. It kind of, just happened on its own. On valuations, and that's why it's a little, important to understand both valuations and the power of flows. Domestic investors were pretty much buying throughout it. And yet the market fell because we were being hit by 8,000 crores, 10,000 crores of foreign selling on a daily basis, right? Now they've stopped selling. In fact, now first trickle of buying has come through. So while we can't predict flows, perhaps we can't underestimate the relevance also, right?
You can't. I appreciate that. And a lot of my friends pay a lot of attention to the FI number, which I really don't.
Okay.
Because anytime there's a transaction on the stock exchange, there's a buyer and a seller. So if the foreigner is selling, someone is buying at the other end. Stocks don't go in a zero hole on the ground. I mean, there's always a buyer at the other end of the stock. So things are being bought. Someone who thought it was expensive was selling it or booking profits. Someone was thinking it's value and he can make money, so he was buying it. So, that takes it. Of course, it's important. I'm not denying the importance of the FI number out there. But I don't particularly pay too much attention to it. It's just one of the things we look at out there. What we particularly pay attention to is on the ground, what's happening. Is the company, how is the company dealing with the Trump tariff? How is the company dealing with inflation? How is the company dealing with the changing technology environment? I think those are more relevant questions for an investor to ask in a bottom-up manner. And I think that's just noise that you can't control. If you're going to sell tomorrow, how do you control that? If oil spikes up, you can't control that. If Ukraine war ends or does not end, you can't control that. But you can control what you buy. And you want to buy those businesses that are, doing good, bulletproofing themselves. And which is what I've done, which is what has been very successful over the last few years.
Fantastic. Take your point completely. There's always a buyer on the other side.
There always is. So, what does it matter?
The color of money doesn't matter. There's someone putting in the money.
Psychologically, it matters, but actually it doesn't matter. The shakeout has been good. It has tested you. It has, proven that you have a conviction in what you buy. And there's no something called easy money on the large street. As everyone thinks that I buy today, make tomorrow, which had gone on for a few years. But all the veterans have told you that, wait, when the correction comes, people will panic. But I think if they hold true to the flag and, I think it's great. I think the domestic money prospering or domestic India is great. We welcome foreign money, we welcome foreign capital, but they have a right to sell, and I don't begrudge them that.
So absolutely, Ramesh. I mean, I completely agree with you. May this wave of domestic money, may it become a tsunami and may it continue for all our sakes. But my question was more sort of regarding valuations and whether so much of domestic money continuously coming in the market, whether that will sort of create its own valuation challenges.
Surabhi, the market has a self-correcting mechanism, which we just saw. I mean, the index fell, 10, 12% from the peak. So it has a self-correcting mechanism built in. When valuations get too high or too stretched, someone on the other side will say sell, and it cannot be absorbed by the market, which is exactly what happened. So why worry about it? It's market has a self-correcting mechanism. If you take stocks to unbelievable heights, the short seller will step in, or the promoters will sell in, or the insiders will sell in, and want to encash it. So that will act as a natural check on the market, which it has done. As long as there's not any undue amount of leverage in the system. There was, I think, 70,000 crores of margin funding, which is the size of a small mid-cap company in India today. So there's no leverage. The banking system has no leverage. The government had fiscal restraint. So, in fact, money was tight. So there was no reason to believe that this would be a long-lasting bear market. And market will correct itself. Anytime the valuations of something become excessive, people step in and sell. Insiders sell, someone sells, and that creates a buying opportunity.
Welcome back. And just before we went into this break, we were talking about that exclusive news break that CNBC Awaaz had put out with regards to M&M looking to acquire the entire promoter stake of SML Isuzu. And the stock is also seeing some bit of recovery from the lows of the day. Yatin Mota of CNBC Awaaz, who had this news break, is joining in with more details on this. Yatin, what are your sources telling you?
What we gather from sources that Mahindra & Mahindra has initiated talks with Sumitomo, which is the parent of SML Isuzu, for a potential stake buy. Sumitomo currently holds 44% stake and has publicly stated that they would like to exit lower profitable businesses as well as smaller businesses of the group, which includes SML Isuzu. Now, what we are gathering is that Mahindra & Mahindra board is likely to meet shortly in this week for making a decision on the transaction. However, sources also added that the valuation that M&M is seeking for the stake, is broadly 1,800 to 2,000 crores, which would be a slight discount to the current market price. However, when we contacted Mahindra & Mahindra for this particular stake buy story, Mahindra & Mahindra said that they will not comment on the story since it's speculative, and there is a comment still awaited from SML Isuzu. But broadly, what we are gathering is that Sumitomo has accelerated the divestment process for SML Isuzu, and the Mahindra & Mahindra board will shortly meet to consider this particular transaction.
All right, will be very interesting to see how this goes. Yatin, thank you so much for breaking that for us. Mahindra & Mahindra, which was under a wee bit of pressure, has now ameliorated from the lows, currently at the high point of trade, still lower by about 1.5%, but has seen a fair amount of recovery. And SML Isuzu itself, which was trading at a firm premium, has now come off. So the intraday chart of SML Isuzu comes up for you from that big spike after the announcement was made to the price discovery that came by in terms of a valuation that Yatin just spoke about. So the stock has seen a bit of a dip from the top as well. And amidst all of this, the one that continues to gain is JBM Auto, perhaps on the back of not having to spend that kind of money for this acquisition, at least in the near term, some easing on their balance sheet. Take a short break, come back, get you more on the markets and a lot of individual stock specific details. But as we do that, before we take that short break, it's also a good time to get in the FNO perspective on the market right now, doing extremely well. We have, the Nifty up nearly 300 points, the Nifty Bank up 1,100 points. So big moves that are taking place across the board. The Nifty Bank is up 2%, and it's the Nifty Bank which is extremely crucial, because this leg of the rally over the last few trading sessions on the Nifty has been led by the Nifty Bank. Fair and square. It's above the 20-day moving average, above the 50-day moving average. The 100 and the 200-day moving average have been crossed as well. It's just 5% away from its 52-week high. And if you look at the key technical levels, the Nifty has crossed the 50-day moving average and holds above the 100-day moving average today. The Nifty Bank is above all of them. the 200-day moving average, which the Nifty bank has crossed, which was just under that 51,000 mark. For the Nifty, that mark is at 24,000. So just keep an eye out on that one. The Nifty 200-day moving average, if that was to come by, then 24,000 is the mark that we'll keep an eye out on. We'll also keep an eye out on India VIX. India VIX, even as the markets moved higher, has spiked in expiry week, telling you that maybe from here on, the gains may not be as easy as they were in the last 5 or 6 trading sessions, though where it goes and how it goes is something that we'll most definitely watch out for. The one thing is clear, that the base has definitely moved higher. 23,500 put writers are active, 23,600 put writers are active as well. So we have to be comfortable with life above that 23,500 mark on the Nifty for sure. On the way up, this up move today has been caused further short covering in the 23,500 call and the 23,600 call. What it's also done is it's made some of these 24,000 call buyers a little greedy. So there's been punting at the 24,000 call. Remember last week there was purchase at the 23,300 call for 1.5 rupees, and now the 24,000 call, the ones that expire on Thursday are trading at 32 rupees a premium. So just keep an eye out on that one. And NMDC is the one stock I'm watching out for, may exit F&O ban with the kind of decline that we've seen in open interest here.
I tell you what, the bulls will definitely be comfortable with life above 23,500, and just as Mangalam was describing his F&O setup, the Nifty has turned positive on a year-to-date basis. 23,644 is the level that it had to cross. 23,647 is where the index stands right now. So a 100 beckoning for the Nifty, almost there as well. 23,650 now is where the index stands. Manish Hathiramani of Deendayal Investments is joining us now for a quick chart check. Manish, good afternoon. Thank you for joining in. Is 24,000 all but done now on the index? What are the charts indicating here? And couple that up with your stock recommendations as well.
Good afternoon, Hormuz and Mangalam. Thank you so much for having me on the show. Well, we are nudging very close to that resistance of 23,600 to 23,650. I feel it's a mere formality, but because it's a technical level, we must respect it. If we can keep above this level on a closing basis, I think our next move will straight away be to 24,100. Giving my stock recommendations, I'm working with 2 buy calls. The first one is on Bharat Electronics, which is for a target of 330, stop loss of 290. After taking support at lower levels of 250, the stock has broken out in a strong uptrend, having crossed multiple short-term resistance levels. We have even now triggered the short-term high of 300, and that should propel the stock to a newer high. The second one is on Reliance Industries for a target of 1405, stop loss of 1210. 1250 was a stiff resistance for the stock, and we have crossed that on the back of good volumes. 1320 to 1330 is the next level of resistance. Once again, because chartical parameters are strong, we expect that the resistance will fly through, and thus the stock can move higher.
All right, Manish, thank you so much for sparing time, joining us with your views on the index and on specific stocks as well. The Nifty, 23,650, 300 points higher now on the index. Cannot complain if you are a bull, turning positive for the year as well. We take a short break. Up next, we get you excerpts from their exclusive conversation that Mangalam had with the management of Pidilite on the growth outlook going forward. Stay tuned.
Welcome back. Pidilite is a stock on our radar. The leadership is undergoing a rejig, a transition, and I caught up with the outgoing MD and the incoming MD of Pidilite in an exclusive conversation to sit down and talk about their growth strategies going forward, and more importantly, asking how the company plans to expand beyond their core categories itself and increase the share of growth as well in pioneer categories. Let's listen into this extremely interesting conversation that I had with Bharat Puri and Sudhanshu Vats.
As far as pioneer categories are concerned, we have a very simple 2x2, which is A, channel, and B, consumer. On the other side, the right to win and the customer. When we have at least 3 of the 4 ticked, then it's a shortlisted category. I have 2 of my most senior managers who actually were pulled out of CEO jobs at Pidilite, and who actually scour the world, look at affinity markets, markets a few years ahead of us, so on, on what could be emerging categories in the home improvement space.
Right.
They will come with a long list. We will then look and see, listen, this makes sense. Yes, here we have a chance to, for example, create the category. We will then put in a mix and pilot. Normally test product first, then pilot. The wonderful thing is, as you and me speak, we have at least 10 pilots on the market.
Okay.
But those happen below the radar. Once it reaches a certain meets a certain set of action standards, we then say, okay, ready to be pioneer category. Now the button is pressed. It should be approximately 100 crores in 3 years.
Got it.
It then becomes a growth category. Fortunately, India is a lovely growth market. So for a growth category to become a core category is a much longer runway, because then you have to say that, listen, largely the category creation task is done. It's about now growing the category via innovation or via premiumization or via sales and distribution. So like say things like waterproofing or tile adhesives. I mean, waterproofing, 4 out of 10 fellows are doing any form of waterproofing. Tile adhesives, 1 out of 4 guys are doing any tile adhesive. So until this becomes 3 and if that 4 becomes 8, these will still be growth categories. And the wonderful thing is there are lots more growth categories waiting in the meantime.
Yeah.
Core is clear that, listen, I mean, the biggest mistake any company can make is assume that the core is mature, and a lot of times fellows will say, okay, listen, oh, this is a mature category. Well, there are no mature categories, there are only tired managers, right?
That's a good one.
So as far as we're concerned, core categories must lead the growth. You must grow 1 to 2 times GDP. Hopefully, when we correlate well to GDP growth. So the core category should grow at GDP, and then your own efforts, whether they're at innovation, whether they're at premiumization, whether they're at sales and distribution, should give you that further multiplier. And when we look back over our last 10 years, I think that's been one of our formulas where from 80-20, core 80-20 to growth and pioneer, we're now pretty much 55-45, 52-40, let's just say 55-45. That itself has given us a flywheel for growth. So every quarter when you come and harass me and ask me, there's double-digit volume growth, why are you guys doing it, the others not? And I said, probably the portfolio and the sector that we are in makes a lot of difference.
And now I'll be harassing him a lot more. What has been the success ratio from, piloting to pioneer, from pioneer to, growth, and from growth to core? What is the failure rate among each of these, so that we know, okay, if you're working on 10 ideas, as Mr. Puri said, one of them could perhaps become a core at some point in time?
Yeah. So, Mangalam, it's a great question. While I may not be able to put a number to it, but I'll tell you how we look at this at Pidilite. So, one thing which, and Bharat touched upon it just a little while back, I think one is that we have enormous patience during the piloting stage as well, where we keep doing do, learn, do. So, we are never in a hurry to say, okay, this is not working, shut it.
Okay.
Does that mean that everything which we do succeeds? No. But the point is that we are enormously patient. We do a lot of do, learn, do. We take a lot of feedback. So one of the strengths of Pidilite, actually, and not only in developing pioneering, but it's become a part of DNA because of this journey, is that you continuously take feedback and you continuously iterate. So there is this concept of continuous improvement and so much focus on execution that you keep asking, what are the things which have not worked well? How can we make that better? And the focus, Mangalam, compared to many other companies, having had worked with many other very good organizations, I can tell you the focus is first and foremost on seeing what could we have done better. Because most of the time the tendency is, oh, this is not right, the market is sluggish, as we were just talking about, or the consumer is not ready. But the first question you have to ask is that, what have we not done right? So I think that philosophy keeps making. You would see that a lot of our pioneering categories have got into growth. The latest example I could share with you is that of ROF.
Yes.
And it is a very promising growth category, continuing to do very well. But I think we've had many such examples as we
You have earmarked your growth targets, 10% volume growth year on year, along with the margin band that you've spoken about, growth coming in from core categories, growth categories, pioneer categories as well. When I look at your business, say 5 years from now, when I'm speaking to Sudhanshu, what would you see as the revenue mix of the company? How much of that would come from international? It's 55 core, 45 growth and pioneer right now. How does the revenue mix of the business Pidilite look like?
Yeah, so let me answer at two levels, Mangalam. I think one is we are not very fond of giving out a number, but the mix is a good question you've asked. So I think, when we started this journey and spoke about it 20-80, and now we are close to about 55 core or 80-20, 80 core, 20 growth in Pioneer. Now we are 55 core and 45 growth in Pioneer. Our sense is this is a near equilibrium. So therefore, because to the question you would ask some time back, which is that, what happens is Pioneer becomes core and then, growth and growth becomes core.
Right.
So therefore, there will be a mix of that which will be happening, and we are at a pretty healthy equilibrium, in my opinion. 50% give take here and there, a little bit of points. So that is what is the mix, if I could say that. And I think from the point of view of the second thing you said, 5 years out, on the international piece, I think the second part of your question, see, we are currently 10% plus on our international composition. Our thinking is that we will continue to remain focused in emerging markets where we can replicate the success of India and the model of India onto those markets. And these markets, as you clearly know, are South Asia, Africa, maybe parts of Southeast Asia, and we also have presence in Middle East. So I think we will continue to build and strengthen our presence in these markets, drive these markets further, and therefore the ratios will keep inching upwards. Now, what that ratio would be is perhaps unfair for me to at this point and say we are 10% plus, we will keep getting better. We will be an emerging markets multinational company, which is something we have stated. We are steadfast on that journey.
And how much comes in from paints?
That only astrologers can tell me.
Interesting conversation out there. There are no mature categories, only tired managers. And the question for Pidilite always is, what could we have done better as against looking at the external environment? This conversation is full of such nuggets. What you can do is catch all of this conversation today at 5:30 p.m. only on CNBC-TV18. Take a shot.
Welcome back. 285 points higher on the index, 1,000 points higher on the Sensex now, and the rally that started from the 4th of March when the index had made that low of 21,964 is gaining strength even further. A sixth straight day of gains now for the index, and it's almost 1,700 points now that the index has gained from those lows. The stocks that have hit a 52-week high in today's trading session, Kotak Mahindra Bank is one of them, 4.5% higher on that stock. Chambal Fertilizers too having a good day at the office today, 3.75% higher there as well. Bajaj Finance continues to make new highs in today's session as well, 9092 now on Bajaj Finance, and at least 5 analysts who have coverage on the stock expecting it to cross 10,000 and beyond, with CLSA now even projecting the stock to hit 11,000 rupees going forward. Some of the other names that have hit a 52-week high include Shree Cement. Of course, Ramesh Damani was alluding to this in his interaction with CNBC-TV18, that despite a falling market, stocks like Bajaj Finance, Shree Cement were making new highs, and that too having a good day today, 1.5% higher on Shree Cement as well. But we take a short break here on Halftime Report. On the other side, Manisha Gupta joins in with Anindya Banerjee of Kotak Securities. Stay tuned.
Joining us now is Anindya Banerjee. He's Senior VP, Head of Research, Currency and Commodities Interest Rates at Kotak Securities. Anindya, hi. Thank you so much for joining in. And it's a week that has started with some bit of a profit taking in gold and silver. But even before we get to that, and since you follow currencies very closely, the kind of appreciation that we've seen for the rupee, 85.75 at the last count, how are you looking at that?
Thank you for having me, Manisha. Indian rupee is playing a catch-up to what's happening to other currencies again. The US dollar. So US dollar index is down almost 7% from the this year's highs from mid-Jan. So Indian rupee is playing that catch-up, aided by the lack of selling from the FPIs in the equity market, a bit of inflows in debt, and especially we are in the financial year end, and we tend to see a lot of selling from the exporters into the market. So all those factors in combination has created this nice rally in the Indian rupee against the dollar, and it may continue for a couple of weeks more.
And then there are all those reports about rupee going to 89 and 90 and 91 when it just went to 88 are now out of the whack. And as you said, you're looking at more appreciation going in. Is that the kind of scenario that we might see continuing for the rest of this year?
Manisha, this appreciation could be a short-term phenomena because the trade war threat is not over, and the reciprocal tariffs are set to kick in from April onwards. And we continue to expect that the trade war between China and US will intensify in the coming months and quarters, because the whole policy of the Trump administration is America first. So you can't have America first and globalization going hand in hand, because they're completely opposite. So we expect the trade war to intensify, and that can have a negative impact on emerging market currencies. But for the moment, next few weeks, let's enjoy the appreciation in the rupee.
All right, as you say, how are you looking at the gold and silver prices, and gold especially, because we've seen all-time highs and then some, restraint there, trading nearly $30 from those kind of highs. There's been a lot of investment buying, yes, the retail jewelry buying in India, China, not much to write home about. How are you looking at the prices? Is the high for the near term done for this too?
Right. So if we look at the COMEX positioning, so the CFTC report as of last Tuesday, that report clearly indicates that the speculative length has been at record levels. And that is one of the major reasons why over the past couple of sessions, we have seen a profit-taking dip. So we think that a bit of money could be rotating from precious metals into equities, because equities between Jan, Feb, and March had fallen down, and the precious metals has gone the opposite way. So a bit of money could be rotating. That is also causing this correction. But again, the medium-term outlook is quite bullish on gold and silver. So let's say on MCX around 86,000, 86,500 is a very strong base on gold. On silver, around, let's say, 96,000 to 96,500 is a very strong base. So we expect these levels where the long-term investor may come in and accumulate more. And over the medium term, we could see levels of 1 lakh or even 1,03,000 in silver, and 88,000, 89,000 on gold, on MCX.
Point taken. I also want to talk about copper, because the kind of headlines this one seems to be making are more sustaining right now. We've seen 12% of gains on LME in this year, and we've seen 25% of gains on COMEX until time in sense of copper. The kind of price disparity that we have started to see with the US and China, both major consumers for the metal, and of course the rest of the world as well. How are you looking at that making sense to prices? Would you say much has been factored in, and from here on, what fundamentals will you watch out for, and what's your price sense?
Right. So one of the markers which a trader needs to watch now is the spread between LME and COMEX. That's currently hovering around 14%, because the market is factoring in the 25% possible tariffs on copper in America. So this spread is very important, because over the past 3-4 weeks, what we have seen as a spread has actually increased. The global prices of copper has also gone up. So that will be one particular marker which short-term traders should watch. If that spread starts to contract, it could be a sign that the immediate speculative buying is getting over. But as of now, copper is in a bull run, and we could see levels of 930 or even 940 on the MCX. That's our expectation.
Barring copper, any other metals that you have an eyesight on? Because we've seen aluminum prices hold firm. Zinc also did see some stronger fundamentals come in. At this point in time, slightly directionless in the trade, though.
So aluminium has had a fantastic run, as you said, yes. So rather than aluminium, I'd be actually focusing on zinc, because zinc has had a bit of a strong consolidation below the levels of 270 on MCX. So we could see levels of 295 to 300 over the next few weeks. So that will be one counter apart from copper, where I could look for the upside bets.
A final word then on the crude oil prices, and we've seen 2 weeks of gains onto this one, and this is the third week that we're looking at prices almost steady, holding well. One, of course, is the OPEC and allies. The second is what's happening with Israel and Gaza all over yet again.
Yes, in crude, actually, if you see that we don't have a very strong factor to create a trend, be it up or down. And around the 65, 66 levels, $1 a barrel on the WTI, it has formed a strong base in the last few years. Every time it has come there, it has bounced. So this time too, we have seen a bounce from around those levels. So we could see levels of let's say $71, 71.5 on the WTI. But nothing spectacular is expected here. It could continue to be in a broad range.
Okay.
All right, nothing spectacular expected in crude. That should do well for the Indian macros. Thank you so much for joining in, Anindya, and giving your views on a whole host of commodities. Manisha, for taking us through with that conversation as well. As we speak, these gas stocks are doing extremely well. GAIL is up 5%. But the most notable gainer in the last half an hour has been SML Isuzu, which after the news break continues to do well. Was a little volatile. Remember, the valuation that Mahindra is seeking as per Yatin's story is close to 1,400 to 1,500 rupees per share. The stock continues to surge higher and is now above that 1,738 odd mark itself. We call time on this edition of Halftime Report. Stay tuned. Business Lunch takes all the market action ahead.